This has to be by far the easiest way to trade. If you don't want to learn how to trade and you just want the absolute easiest thing, I'm showing you right now. It's trading on the SMAs. There's several different ways of trading, but this has to be by far the absolute easiest. On the daily time frame, when the candle closes above the 50, which is the red SMA, you buy. And I don't want to just show you that example. Well, let me show you right here. So you buy it, and then when it crosses below it and it closes, you sell. Now, you will be able to, buy it, and then it comes down right away, and then you sell it. And then you buy it, and then you sell it. Now, granted, it's on the daily candle closes, so you're not doing this multiple times a day. You're doing this once a day, once every other day, something like that. And then you just wait for it to cross above, candle closes, and you buy. Eventually, it's going to go up because it's not going to do this up and down, up and down, up and down, up and down for months and months and months and months. It's going to do it maybe 3-4 times in a week before it starts moving either up or down. If it moves down, you just wait until it crosses this. So this is by far the absolute easiest way to trade. Now, when you see mentors that say, yeah, guys, look, all we got to do is wait for the 200 SMA, 200 SMA on the 1 minute time frame, on the 5 minute time frame, 15 minute time frame, 7 minute time frame, whatever time frame. All you got to do is just wait for it, guys. It's gonna look at this. This is how we make all our money. No, because this is what they do. They show you after the fact, because there are plenty of times where the price action would do this, then this, then this, and this, and this, and this, and this, and this, but they don't show you this part. They just show you the part that makes them look good. So just to let you know, I show you like in the moment. So back to our example. Let's go back to our example. And that's what's so important. Like, it really gets me upset when I see these mentors, saying all this stuff. It's like, oh yeah, guys, look, on the 7 minute time frame, the 200 SMA, I told you, once it broke above it, man, we got so much gains. Or if they were doing a short, once it broke below it, look at all these gains, guys. But it could have easily gone the other way. So just be careful, guys. Just be careful. Like, for me, I'm looking out for you. I'm looking out for you. So just kind of give you a heads up. If you have money, stop messing around. Do the VIP. If you don't have money, don't worry about it. I'll show you how to do this stuff for free on the videos that we have here. So if you want just to support the channel, just say, hey, Joe, you're the best, and you will become my favorite. It's $19 a month if you want to do that. And then, of course, if you want to do the monthly with a credit card, it's right here. It's $99 a month. And, of course, you get all this stuff. And then, of course, if you want to do lifetime, here's a lifetime. Here's a lifetime. Now, if you want to pay with a crypto, then just send me a message on Telegram. So you allow room for the candles to drop and eventually pop outside of the Bollinger Bands. I don't trade Bollinger Bands. And I'll tell you why, too. So what I like to do is I like to show by example. I don't just like to say it. I like to show you. So the first thing I got to do is change these, because these annoy me. We'll do this. And we'll do this. And no background. Get out of here, back. And then that's it. Everything else stays the same. Okay. So for the Bollinger Bands, all this is the 21-day moving average. That's all this is. And this is another moving average. I forget what the number is. Or maybe this is EMA. I forget what it is. But when people trade the Bollinger Bands, the way they trade them is when the bands come together. When the bands come together, get ready for a move, because this is squeezing. All right, that's cool. Is it going to go up or down? No. So for the Bollinger Bands, when they squeeze together, that just means it's going to move. Awesome. You already said that. Up or down? No, that's it. When they squeeze together, they're just going to move. Oh. Well, that doesn't help me. But when it moves away and it gets outside of the band, the price comes back down like a rubber band, back to the white one. They don't They don't tell you this 21, but it's 21. Back to the middle. Oh, wow. You know what? Look at this. You're right. You're right. Whoa, man, you're right. So what you're saying, now granted, I'm being facetious right now. Granted, so what you're saying, this is what the other mentors, they show you. I don't, because I show you how to actually trade. I don't show you, because all this is after the fact. And I'll do an example for you too. So what you're saying, again, I'm being facetious. I'm being condescending. I'm making fun of them. So what you're saying is that when the price action goes away from the 21-day moving average, or the, you know, I'm on the daily time frame, or the white line, and it goes outside of the band, it's going to come back like a rubber band and snap in. Yes. Whoa. Dude, you're right. It happened again. And then if it goes the opposite way and it goes to the band, it's going to go back. Man, look at this. You are spot on. This is how I'm going to trade. This is the best way. Look at this. When it moves away from the center, it snaps back. All right. So now, no longer being facetious, now I'm actually teaching you the proper way to look at this. And by knowing what this white line is the key. This white line is the 21-day moving average. Now, with that being said, anybody who tells you that this is a magnet, be careful with their teaching. Now, granted, this is how I was taught. And I'm guessing other mentors have taught the same. I don't know. But this is not a magnet. This is a moving average. It is an average. It's in the name. It's an average of the candle body closes. So what the configuration is, the candle body closes, the candle bodies. It's a mathematical equation. This is the average of those. So if the price action, and I'm going to draw it out for you. If the price action does this and goes to the moon, the 21-day moving average has to follow this, and it's slow. So what I consider the price action to be the parent. The moving average, or this white line, is a child. You're holding the child's hand, and the child's following you. It's got little legs. The little boy, little girl, little kid, whatever, it's got little legs. Grown-up's got big legs, and it's doing this number, and it's doing this number. And at the same time, this is doing this. So this is the top band, but now it's having to come up. And it's having to come up, and it's having to come up, and it's having to come up. And then finally, it doesn't, because the price action. So the price action continuing to do this. Well, anyway, you get the picture. The price action continues to do this. So this is an average. So this is going like this. This is your white. This is your white line right here. This is trying its hardest to catch up to the price action. Eventually, price is going to come down. Why? Because this is the magnet? Nope. Why? People who bought down here and here and here and here and here, they're selling. They're doing exactly what you want to do. They are buying low and selling high. So finally, when it does start coming down, guess what's going to happen? It's going to cross the 200 SMA. Or I'm sorry, the 21 SMA. It's going to cross this. And now people are going to say, the mentors, you see, guys, I told you, it's a magnet. It moved away from the 21, and now it finally came back. And then now it's going to do something like this. And then now this has to catch up. This has to catch up. And then, more than likely it'll break below it and then come back up. Now, one thing that I always say is never trust me. Don't trust me. Just a guy on the internet. I could be like the best salesman. I could scam you. I can do all that stuff. Look, just go back in history. Go back in history, and let's go to a lower time frame so there's more price action. Go ahead and redo this. So here, price came down. Let's do, I mean, I can pick any spot. Okay, so we'll just do this one. Getting tighter, tighter, tighter. We don't know which way it's going to move. It's starting to come down. Oh, look, it bounced off of the band. No, it didn't. The band is reacting. If we come all the way over here, the band is reacting to this. So if this comes down, the band comes down. And the price action is what moves first. Again, this is the leader. So if the price action comes up, well, now the band is forced to come up. And then now this one has to come down. And then this is the 21. So here, price action broke above, but it doesn't mean that it had to come down. The price action could have continued going up, resulting in this top band chasing it, resulting in this 21 chasing it, resulting in this bottom one chasing it. Price action is what moves everything. All right. So hopefully that made sense. And that's why I do not use Bollinger Bands. Once I figured out that this was a 21-day moving average, or the 21 average SMA, it's like, oh, and this doesn't have to come all the way back down. And there's plenty of times where I tried, because I tried to beat the system. I already did. I tried looking at all the Bollinger Bands, the Ikumoku Cloud, looking for everything. And the main thing is support and resistance. For example, here, it went up and boom, took off. And what does this Bollinger Band do? The top one, it has to catch up to it. And why didn't it return here? 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 So this is a perfect example of that. This is not a magnet. This will come down when it's ready. This will come down when people start taking profit. Then it went sideways. It's supposed to come down, went sideways, and then finally people start selling. Boom. These react. All right. So Panchita, let me know if that helped you understand the Bollinger Bands. Everything that I say is from experience. This is what's going to save you so much time, so much money, and so much effort. Like, it's super important. Now, if you're in the VIP, I have videos that are 3, 4, 5 minutes long on average. If you want to make money, I will show you how. I would offer the free group, but it's already full. I have a huge wait list. So more than likely, if I do let 3 or 4 people go, the spots are filled. Not only that, but when people do sign up for the VIP because they're making money in the free group, I am very, very invested to make you money in this free group so you can get the VIP. When those people leave the free group and get into the VIP, well, there's just so many more people that are trying to take their spot. I would strongly recommend getting the VIP. You're going to make money. Now, granted, none of this is financial advice. It's never hopes and dreams and empty promises, nothing like that. See what I do. See if this makes you money. I give you my real life experience based off of my trainings, based off of my teachings, what I would do at that moment versus what everybody else does, because they want to sell you their course. They want to sell you all that stuff. I show you that my stuff works. Do we win? Yes. Do we lose? Sometimes. That's part of the game. But what I do is I show you all this so that you can see, oh man, I lost today, but Joe said he lost too. So it's okay. That's what I want you to realize, guys. If you like the content that I provide, make sure to smash the like button, subscribe to the channel if you're not already, and leave me a comment in the comment box. And I'll see you on the next video. And as always, let's make this money.